This isn't tax, it's oppression. Higher taxes, limited companies being throttled, digital ID, HMRC unleashing AI to monitor behaviour, mansion taxes floated like trial balloons, all at the same time. This isn't about funding services anymore, it's about control, compliance, and squeezing business owners until they stop building anything at all. And here's where you see it most clearly. From April 2026, dividend tax goes up 10.75% at basic rate and 35.75% at higher rate. That single change flips the maths. On 100 grand profit, a sole trader hands over about 32 grand in income tax and national insurance and keeps roughly 68 grand. A limited company, after corporation tax and then the new dividend rates, ends up closer to 65 grand if you extract everything. Same work, same risk, same profit. And now the sole trader is better off. Not because sole traders got a break, but because limited companies were deliberately squeezed. They didn't lower income tax, they raised dividend tax because extraction was the target. So let's have a look at this properly. The same profit, 100 grand, two structures, every tax, every NI. So we're comparing a sole trader in a limited company, full extraction, no pension, no student loans, no complicating things unnecessarily. For the sole trader, 100 grand profit, using the 12,500 allowance, they'll pay roughly 7.5 grand at the 20% rate and roughly 20,000 at the 40% rate. Total tax, 27,432. Their national insurance class 2 is £179, class 4 at 9%, 3,393, 995, 2%. The total NIC is 4,567. So total tax in NI, 31,999. Net take home, 68,000. For the limited company on the same 100 grand profit, director salary is 12,500. Employer NI is due because the secondary threshold is 5,000. And the employer NI rate on earnings above the threshold is 15%. So that's 1,136 NI contributions. So the salary costs the company 12,500 salary plus 1,136 employer NIs. Total 13,706. The company's taxable profit after salary costs is 86,294. Corporation tax with marginal relief is 19,118. Profit left for dividends is 67,176. Dividend allowance is £500. Taxable dividends is 66,676. Using the new 2026 rates, 37,700 will be taxed at 10.75%, 4,055. 28,976 is taxed at 35.75%, 10,357. Dividend tax total is 14,412. So after tax and NI, we have a total of 52,764. Add the salary of 12,500, and this becomes a total take home of 65,334. Yes, it looks grim. The sole trader is now better off. And I'm not going to sugarcoat it. Limited companies were traditionally the go-to for tax mitigation. That advantage has been squeezed hard, and that was deliberate, but all is not lost. The thing a limited company still gives you, and what our dear Reevesy is clearly trying to erode, is control. Control over timing, control over extraction, control over what happens next. So once you reach the income level that's right for you, not HMRC, and there's surplus left sitting in the business bank account, you don't pull it all out just to get taxed again. You deploy it. Retained profits are only taxed once, and once they're retained, they become fuel. You can invest, you can build wealth, you can buy assets, you can fund pensions, holding companies, investments, all the shiny objects everyone on the internet talks about, but from a position of control, not desperation. So sole trader is fine if you want to earn, spend and repeat, but a limited company, even now, is how you stop playing defence and start designing outcomes. They can squeeze extraction, they can raise rates, they can watch everything with AI, but they still can't tax money you haven't taken yet. And that's the leverage of a limited company. So here's the bottom line. You can stay angry or you can get organised. If you want to understand how this actually works, start with the tax game plan. links in the description. It lays out the salary and dividend strategy and what to do before you start making emotional decisions. If you're already at the point where there's surplus in the business and you want help deploying it properly, book with the team. We don't do hype, we build structures that hold up under pressure. And finally, a quick update. We're building a school community because YouTube memberships can't be structured in a way that's cohesive, logical, or easy to follow. And I'm not interested in people feeling lost. If you want the link to the waitlist for the new school community, we're mapping everything properly from foundations to extraction, deployment, structures, trusts, and even global mobility. No random videos, no jumping around, just clear, concise advice at each and every step of your journey. This is about building a clear path step by step so you actually know what to do at the next stage. I'm Sarah, Tax for Pros. Thanks for stopping by.